tech is really losing its religion. But can the same be said about retail client flows, or is this really shaping up to be a monumental buying opportunity for them?
Well, look, I mean, it's in the past, I think it's buying the dip has worked. Is that going to continue to work going into 22? I think from where I sit and what we see where some of our money is flowing is people aren't quite panicked yet. I mean, they're not running for the hills, so to speak. We do have our Asian customer base is probably a little more optimistic than our overall population at this point. We've seen some of that rotation into the consumer discretionary, kind of back into information technology. And then as we kind of talk about interest rates and Fed and the central bank, we've seen a little more focus from our customer base kind of going back towards financials. And then one of the things that I've been saying for the last kind of 9 to 12 months is kind of one of the biggest correlated trades for a long time has been energy, what's going on with COVID. And you've seen the energy markets just kind of take off here recently, and all the stocks that especially the big oil majors and the drillers have really been rewarded for that. And we've seen our customers participating in that part of the that sector as well.
So, Chris, all of this is really consistent with value over growth. What about the tech names in the Chinese context? What are flows telling you about Baidu, Ali, and Tencent?
Yeah, look, I mean, so we've seen our customers maybe the last couple of months maybe dipping their toe in the water a little bit, but it was a little more selling pressure recently, especially on some of the big Chinese tech names, Alibaba, Tencent, even Didi, kind of the Oriental Education, some of these names. Well, we've seen some participation, some active trading, but a little on the net selling here over the last 4-week period. But not concerning. I mean, it's literally not, kind of dumping everything. I mean, the things that are probably more difficult for our customers and traders around the globe is just this volatility that we've had over the last few weeks. I mean, really tough to kind of pick a bottom. I mean, it's like, the old adage, how do you catch a falling knife? I mean, but, these charts are just all over the place. I mean, SPU's up 50 yesterday, down 50 here in the futures. I mean, it's difficult to kind of pick a period. But it seems like that buy the dip mentality, and that overall kind of sentiment has worked for the last 12 months. And for me, and kind of what I'm looking at in terms of, I believe that the current volatility status is a little bit overdone. I think if you look at it, a lot of the worst case scenarios are getting priced in across the board on a lot of these different things that are all over the news right now, and that's everything from global tensions, from rising U.S. dollar. Sustained long-term inflation, the different what's going on with, the tapering around, the different central banks around the world, and then also tie in what's going on with COVID, the supply shortages, and the labor shortages, the supply crunch. If we're pricing in all these things, yeah, this volatility is probably warranted. But I think at some point, if we can get past some of this supply crunch, some of these labor shortages, that we'll have less reason for the Fed, for other central banks around the world to be, more, I guess, aggressive in terms of raising the rates, which is kind of driving that whole inflation talk right now at the beginning part here of 22.